So Buffalo Wild Wings, BWLD. All right, let's take a look. So we have this nice upwards trend here, and then people are starting to take some profit, and we form a bit of a cup, and then it just falls apart, right? Huge gap down, massive volume. Obviously, something went drastically wrong. Then we have the base of the cup form, and then a nice little uptrend saying, okay, we probably oversold, and then boom, a gap up probably on the next earnings results, right? And then we're reforming that top. Maybe people who got in here are starting to sell, and so we'd start to define the handle pinging in and around here, which is where we're at. So let's take a look at this as a whole. The actual shape is okay in the sense that it's kind of U-ish. Obviously the gaps up and gaps down are kind of scary. And also the extent with which the cup base goes down. So it goes over 50%. But you can see the general sense of the pattern here. If you were a believer in Buffalo Wild Wings, right, your first potential entry point would be when it just breaks out of the handle. But if you were looking for something more solid for confirmation, then you would just simply acquire once it broke out of this trend line and then touched back to reaffirm the trend line, and then hopefully would continue on a new upwards trend. FIZZ, National Beverage Corp. So we had this big run up here, and then profit taking, and then a plunge, and then a nice little basin, and then a resurgence, and so forth. So in a very general sense, this forms a cup, right? We now have the two lips of the cup, and we've reached 26.42. Presumably we're going to start forming a handle now, if this is a cup and handle pattern, where we kind of oscillate over here for a little while. Nice on the volume, many concerning parts of this stock though, right? For a true cup and handle, we've gone way below 50%, so not a 20 or 30% haircut. We have this attempt at defining a cup previously, right? And then having this either be the handle, but the handle goes way past the bottom, right? So then it just redefines the cup. There's all sorts of conflicting information that's fighting each other. So I would just be careful of this one. But you can see how, in a general sense, a cup is formed. So NFLX. I didn't really believe this when I heard about it, but so I had to actually go down to the 2-hour chart to be really able to start to see what some people were saying. You can see here that we have the long upwards trend and now some selling off, right? And then we had the plunge associated with just the epic collapse of the market. Then we had the resurgence, and now we're forming a bit of a handle that you can see here. So in a very crude way, you can argue a cup and handle here, right? But it violates a lot of our rules. We have this massive plunge. We also have the V-shaped rather than a U-shape. So it's not a natural sort of, we've naturally come to the end of our uptrend and we're gradually going to sell off till people see that haircut and then take off. It's a very forced, like, it sold, and so people buy, and then people sell. So it's not really a natural pattern. It's a very forced pattern, which is what the V is. But you can see it. So if you really like Netflix, and it is a solid company, I mean, they're doing a lot of great stuff. They're heavily promoted. A lot of the industry really likes them. Then you could argue that if it breaks out of this channel, or particularly breaks out of this upper resistance line, then it could form the start of a new positive trend. So yeah, I believe it. It's not ideal, but I do see it. Corning, GLW. Now this one I found a bit funny because there was someone who was very adamant that this was a cup and handle pattern, and it just really isn't. The cup and handle is that something is in a positive trend, and then it pauses that positive trend because people profit take, and it naturally falls for a little while. But that momentum then builds slowly and slowly, and then it recovers and starts a new upwards trend. Stocks, this is a cup, I agree, in the sense that it has dipped and it has recovered. However, it is coming from a very significant and prolonged downtrend. So it is not a cup and handle in the true sort of psychological sense, where you're saying that traders are naturally selling and then will resume buying. This is a stock that has been sold on an ongoing basis, and so there isn't that same psychological momentum to it. So no, not a cup and handle. Okay, so the last one I'll do today is Southwest Airlines, LUV. Again, this is a 2-hour chart. So we're looking at this long, generous uptrend followed by the tapering. And you can argue that the bottom of a cup is soon to be formed, right? We have some lesser volume. We have this nice gradual slope. Presumably it could then, the buying would pick up and it would pick up on creating the top part of the cup. Then some selling to indicate the handle, and then presumably the increase of an uptrend. So this is important to see that we've had weekly charts and we've had daily charts and we've had hourly charts, and you can see cup and handle across all of those. When you look at the definition, it says a specific duration in time, but really it's more like a specific duration of periods at the scale that you're looking at is the important factor. So whether you're looking at a 2-hour or daily or even minute chart, you can still see cup and handle. It's just an appropriate duration that you need to see for the chart itself. All right, that's our show for today. I hope you've enjoyed it and all the videos on the Grumpy Monkey Technical Trading channel. If you enjoy them, please subscribe. It does a lot to build the user base, but it also boosts my confidence as well, which is always appreciated. So that's it, and please stay tuned for the next episode.